Catching up here with John Najarian, fresh off the set of the halftime report. John, you're our mascot around here in the CNBC studios.
Sometimes.
Now tell us, a week from now, we got the Fed coming out. Everyone thinks they're going to hike rates. You're seeing an unusual trade out there.
Yeah, John, a lot of folks think that when the Fed makes its move, it's going to be bad for emerging markets because, of course, it draws deposits to the United States. The dollar goes up, emerging market economies, dollars or whatever they are, go down. That is true, and that relationship will probably remain, except that I think we've gotten ahead of ourselves. So does Jeff Gundlach. We both think that when the 10-year got up to nearly 2.5, it's more likely to pull back than it is to surge through there. So with that kind of outlook, I'm not surprised to see the EEM trade really big. 36.50 calls, they were bought huge today, and they sold the 38 calls. So when you define it like that, they're only looking for a move of 1.5 points to the upside, and they're only paying pennies, literally pennies for that trade. Paid 40 cents for the one call, the 36.50s, sold the other for a dime. That's 30 cents, but they did it in big size.
So the skeptics will say, though, you got Trump going into the White House, you got the Fed raising rates, and I'm going to buy
an emerging market. Yeah.
So what do you do with this trade, though? Keep a close eye on it. You got to be careful, right? This isn't a long-term call.
Right, and this one will actually expire before Trump becomes the president.
Okay.
Because third Friday in January, this trade expires. I think it's a play for the Fed move next week, which is a 2-day Fed meeting, of course, but it's pretty much dialed in that it's going to be 0.25%. If that's what it is, and the rates have already moved 0.5%, I think we're more likely to pull back. That's good for emerging markets.
All right, John, thanks.
Thank you, John.